It's that time again. Stick around for your September real estate market update. Hi, I'm Paula Flagg with Paula Flagg Homes, and this is your September real estate market update. Now, low inventory levels continue throughout the region, even though elevated interest rates have reduced the number of buyers in the market. Buyer demand is still remains strong and steady for the best houses on the market. So the result is that the DC market has continued to remain quite strong as we head into the fall. So let's take a look at what's been happening around the region. And remember, these numbers are for the greater DC area. If you'd like similar information for your city or neighborhood, let me know and I'd be happy to provide that. Now, for closed sales, we had 6,113 in August. That's up around 300 from July and still down 15% from last August. Average sales price is $660,000, down around 6,000 from the month of July, but still up 6.8% from last August. Average sales price to list price ratio is just under 101%. That means that houses on average are selling for about 1% above list price, and that's in line with what we've seen over the last few months. New listings on the market were 6,358, 200 less than in July, and 22% lower than we saw last August. For active listings in the month of July, we were just under 8,100. That's down about 300 from July and still 18% lower than August of last year. Average days on market is 19 days in August. That's up from 18 days in July. And the median days on market ticked up a couple days as well to 9 in August. It was 7 in July. That number peaked at 31 in January of this year and was at a low of 6 in the month of May. For month supply, we are at 1.42 months. That's slightly higher than last month, but still very in line with what we've been seeing in the market for most of the year. Still a lot of demand for the best properties on the market. Historically, August has been a slower month for real estate in the DC region. It's the last chance for travel and vacations for many people before Congress is back in session and children go back to school. Now, during the pandemic, we didn't have much of a slump in August like we were used to seeing prior to 2020. But this year, we're seeing some of the seasonality start to return to the market. And one of the things that I'm noticing in the market right now with interest rates hovering in the low sevens is that there's a lot of buyer activity, lots of showings. People are interested in buying the house. The hesitation I'm seeing more across the board now is concern for the monthly payment. And this is stemming really from the buyer's desires for what they're looking for in a house, and their comfort level or budget with their monthly payment is not quite in alignment. So there seems to be a growing number of buyers in the market who are being very cautious, not making offers, not finding a home that they're looking for, and waiting for a bit of a shift in price and or interest rate, or for their personal financial situation to improve, such as a child is moving out of daycare into school, or a child is graduating from college, or paying off a car, so that they have more funds available on a monthly basis to put toward their mortgage payment. So what I see is about to happen, and I'm not alone in this belief, is that when we see some relief in the interest rates, the buyers who have been shy about moving forward with offers will not want to miss that opportunity again to get a lower interest rate. And we'll see another round of fierce competition as buyers try to secure their new home and their lower interest rate. Now, I'm recording this at the beginning of the week, and the Fed hasn't made any decisions yet. But from reports that I've been seeing, most people are predicting that the Fed will not raise their rates this month. What's more important, though, to the mortgage industry are the comments that Powell makes after the Fed meeting and what he's forecasting for the future. Now, indications that the Fed believes inflation is under control could result in some relief for mortgage rates. On the other hand, if Powell conveys more concern about ongoing inflation, then the market could see interest rates go up. Now, make sure you're working with an experienced agent that's able to connect you with the best lender for you and your situation. Every lender offers an array of different products, and you want to make sure that you're working with someone who can point you to the right lender for your needs. So, if you think you may be looking to buy a home, sell a home, or invest in real estate in the next year, call me today. It's never too early to start talking to a professional and putting your plan together. My number is 202 670 5880, and I look forward to hearing from you. Thank you for taking the time to watch this video. I hope you enjoyed it and found it helpful. And if you have any suggestions for real estate topics you'd like to learn more about, let me know. And as always, thank you for choosing Paula Flagg Homes for all of your real estate needs.